morning, everybody. It's March 2nd, Sunday, and this is the weekly update with Trader Steve. The market's rather choppy. We had a big blow-off or downtrend. We broke the 9-day moving average on the weekly for the second time in the last few months, and this green line here, the 9-day moving average, is starting to bend over. So when we break this support red line here on the weekly and this green line crosses the red, we will officially be moving into a downtrend, and we'll get into the Russell's already broken it. So and I expect that as consumer sentiment gets worse and worse and worse and the tariff talk goes on, things are just going to deteriorate. But right now, Friday, we'll talk about what happened Friday afternoon. I took a couple positions expecting a quick bounce, but this is the QQQ. We got a big red candle here, and it's bouncing on the 28-day moving average. Didn't break support, but it's going to. It's just a matter of time. Now we're going to go to the SPY, and the SPY, we got the same thing. It broke the 9-day moving average, but it really probed down lower here. But it didn't stay there. It had a quick bounce up. And so the NASDAQ starting to show a lot more weakness than the SPY. Can you say Apple? Apple is a big one in the SPY, and I don't know why, but it is. And then we got the Russell. And look at the crossover right here. So expect, a bounce up, bounce down, but we're officially entering what I would call bear market on the Russell. How far it goes down, I don't know. If it goes down and just goes sideways, I don't know. I'm going to be taking trades in it when it goes up. I'm going to be taking trades in it when it goes down. But I like to use the TNA for that. So we'll see what happens. Now the diamonds, you see it hadn't broken down yet. So these are more of your dividend payers and whatnot. People are running to safety, but we're a long way away from that 200-day moving average. So just keep that in mind. Now here's the transports. They broke the 9-day. They're just chopping in here, and we'll probably expect more weakness. But all the old people, retirees, are traveling and trying to close that bucket list off. So the airlines and travel agencies are still busy, but we'll see how that goes once, craziness in Washington starts affecting those checks that are going out. Now here's gold. Gold is the strongest. I had a position in the gold miners and the ETF, the triple levered, the nugget. We'll get into that later. I sold it after selling some calls. I made some good money in it, and I'm waiting to get back into this trade as soon as interest rates start spiking up. But something's happening. I think interest rates went down last week pretty good, and that pulled gold down. So we'll see what happens. Eventually, people will realize that the liquidity crisis that is brewing is going to land, and everybody will be rolling out of bitcoins and all that crazy stuff and be rolling into gold and money markets and safe havens, short-term bonds. It's going to be something to see, because I don't think Congress is going to do anything about the deficit spending. They're going to pass this tax cut package, and it's just going to roll on, and the deficit's going to get bigger, and eventually the bond market's going to say no way. So wait for that moment. Here's the GDX. You see it probed down, hit the 9-day moving average, but it's going to break this high here at 44. It's as gold goes up, the miners are going to make more and more money. Same premise like the oil drillers, like the Exxon and all of them. If oil goes to $120 a share, they're just minting money as long as people are buying oil. But same with the gold miners. I expect gold will just keep on going up. It's not going to be crazy fast, but it's going to be a steady climb as We see that Congress is unable to take care of their business and have abdicated their duties of fixing the budget. And I won't go any further on that. Here's the TLT, which, as we see, we've got to bounce up. So when the TLT goes up, rates go down. That's what happened. Gold got smacked. I had to cut bait in my nugget trade because I think I'll be able to buy it back cheaper and make more money on it later on. Here's the SMH. It's showing weakens. It's just been in this just chop fest for months. And I expect that eventually we're going to have a breakdown. And I don't know if anybody read the article on CNBC that was going around, and it talked about distillation, where, kind of what DeepSeek did. And they went in and I guess took Chat GTI or whatever it was and used a way cheaper method called distillation and created their own AI software. And the couple examples, the way these people did it, they did it really cheap. And so I can't imagine Google and all these guys just keeping on spending these billions of dollars to create something that most people just aren't going to use. I don't see how I'm ever going to use AI unless I can create an algorithm to, trade with or something. But I don't know if I'll be able to ever use it. I'll give it a shot, but, I could just write an algorithm like JP Morgan has and do better. I'll probably have to hire some Ukrainians to do it, but we'll see. I just don't see that the spend for all the hardware and all that for building these, data centers with little nuclear facilities hooked up to them to power them is going to survive. Everyone should read that article. Distillation, it should calm things down, I think, and then we'll see what happens. And I think one of the legs on the stool in the market is going to crack, and then the correction's going to gather some steam, so to speak. So that's it for the weeklies right now. And we're going to go to the daily chart now. I'm going to start over with the QQQ, and we'll see how that goes. But that's another video, so I'll drop that later on.